This is In the Final Analysis.
Welcome to an In the Final Analysis Minisode. Here is your host and financial advisor for Wisdom Financial Management, Joe Frederick. Hi, Joe.
Hello, Kylie.
Hello,
It's good to
I
see
am
you.
Kylie, the Media Support Manager. Happy to be here with you today.
Yeah, looking forward to it. It's going to be another fun day. Uh,
Absolutely. Yeah,
uh,
today we're going to be kind of continuing our series on kind of investing 101-ish topics for generations. And today we're going to be talking about investing towards retirement for millennials. And for anyone who doesn't know, a millennial is someone in the age range of their late 20s to probably their late 30s, maybe early 40s by now. I myself am a younger millennial, still being in my late 20s. Um, and something that I hear among my peers is that one of the biggest concerns millennials face regarding their future is this nebulous idea about retirement. Many millennials doubt that they'll ever even be able to retire, given the economic trends we've seen in our lifetime. And even then, we question how late into life that would end up even being and what quality of life will look like. So to get started, Joe, I wanted to ask you what type of retirement landscape is likely possible for the millennial generation? Stuff like will there be any social security left for millennials by the time they're supposed to retire and stuff like that.
yeah, Social Security is a big topic. It's been a big topic as far as I can remember, going back and growing up. Whether it's going to be here. I mean, I heard it was going to run out for me, and I wouldn't have it, um, and everybody's still feeling the same thing. Yeah, I know they were saying recently because of the new bill that was signed in January of this year that, Social Security could possibly run out between 2032 and 2035, which is pretty close. But, I really firmly believe, just as they've always done in the past, government's going to make some type of bill or to help takes care of Social Security. The funny, interesting fact, bring up, talking about the millennials and what they want to do. But if you talk to a lot of them or hear from what I've read, studies and things that have been done, millennials are really willing to raise the tax rate for Social Security to put more in at this point. So just simply like if you made $50,000 a year, it would be an extra $25 every 2 weeks that would go into Social Security, as an example. And then, obviously the employer has to match that and put $25 in as well every 2 weeks. But, the landscape for the millennials is really different, because there's a lot of things they're dealing with. As you mentioned, a lot of housing costs are going up, healthcare costs are definitely going up. Um, a lot of them may have a lot of student loans out there that they're trying to pay back, and that they've incurred a lot of debt. So that carries a lot of significant things with that. But also, as you mentioned, they're trying to change the landscape of how they retire. Um, by like what you said, like the one of the terminologies out there right now is gig economy, which is just basically like freelance. They're doing a lot more freelance work, and they're wanting to set themselves up, to, yeah, not like fully retire. Like millennials are not looking at an age to retire. They're looking more at scaling back in retirement, uh, doing what they can now to build their portfolio as fast as they can. And maybe as they get closer to retirement, maybe it's not 65, but maybe at 60, they start working part time, for several years. So, yeah, millennials are kind of unique because they're really not looking to retire. A lot of the millennials came in when in during market downturns, so wages were not as much. They haven't increased accordingly, since they've started working. So that's all those things combined have been a struggle. So they're finding new ways to manage their retirement, more or less with different outlooks on what they're doing. One terminology that's got, the millennials are kind of put in the category of super savers. So, they're really looking to, obviously save and change their landscape of retirement other than the traditional way. They don't feel they can retire in the traditional way. And a lot of that is due that a lot of them they're not looking for traditional jobs. So they're not getting the 401ks and being able for corporations to match and things like that. So it's it's a they're looking at different avenues of retirement, and they're kind of changing the landscape. They could change the landscape of the future of how people look at retirement for sure.
Absolutely. Yeah, we are very enterprising, us millennials.
Yeah, yeah, absolutely, absolutely.
So, how can different investment strategies help millennials plan and save for retirement in this landscape?
Well, kind of like we mentioned, is that they're trying to do different things. I mean, some of them may have a traditional job where they're doing the 401k or Roth or things like that. But one thing they are looking at in studies is they're investing more in like real estate to diversify their portfolio a little bit more. They're investing in, obviously, cryptocurrency is a big thing for millennials that they're investing in, and also private equity. So they're looking for, private companies that are not publicly traded that they can invest in and do things. So, but they're along with that, they're looking at trying to save early. Like I said earlier, they've kind of been tagged with the line of super savers, which is good. I mean, they're because they're realizing that, hey, a lot of these things as we get older or into retirement may not be there for us, and millennials are really good at preparing for that and looking at different avenues of retirement. So they're looking to save earlier, and they're looking to invest earlier. They're not waiting later on in life, like some of the baby boomers did or whatever, because they had more of a traditional means, and then they started doing some late investing with their money. Millennials are really getting in and saving and investing right away.
Excellent. Love to hear it. And what would you say might be like an ideal investment scenario? What would that look like for someone around millennial age?
Yeah, well, the first thing you want to do is you want to start.
Right.
That's a bit, and it doesn't, when people think of investing and things like that, and it's any age, it's not just millennials, it's anybody. It's like, man, I got to have this amount of money to start investing. You really don't. You just need to start. You know, and millennials are really good at, like I said, trying to save or invest or find new means of income, you know, to do that. So that, creating a good budget is the first thing for, and developing some type of financial plan. So you can track your expenses and what you're spending, and obviously your income that you're bringing in. Number two would be to address the debt. So, address your debt. And we mentioned earlier, possibly student loans or credit card debt or anything. So, and that's part of that financial plan of getting yourself together and budgeting expenses and figuring out a way to lower that debt. Start saving as they're really good at. And like I said, just start. Just make a start. And then with that, you want to build some type of emergency fund. Um, if you're good at saving, you want to be able to save, you want to be able to invest, you want to be able to do different things that the millennials are doing, but you also need to try to build an emergency fund. We all, as we get older, you want to buy a home, something goes wrong with your home, washing machine, refrigerator, a car blows up, all those, you know what I mean? All those, or engine, I shouldn't say the car blows up, but just those things that can happen to us just in normal life, and you don't want to have to try to pull money from your investment and you could possibly pay some type of penalty with pulling it out or whatever. So you want to build some type of emergency fund along with all those things. And then I would say, if like I said, millennials like to do a lot of freelance work and things like that to try to build income or part-time work along with freelance and do all that. But if you are in a traditional setting where you work for an employer or corporation and they are giving you an employer match to what you're putting into a 401k or a Roth or anything along those lines, that the corporation take advantage of that. At least put in the amount of money up to what they'll match. So like say for instance, a company is going to match you 5% of what you put in. So try to put that 5% in each time and let the company, because it's free money, that the companies get you, and let that grow tax deferred. One big thing, for millennials with the age that they're at, too, it'd be good if they could, in building that financial plan and budgeting to try to, if you were in a traditional situation, to also, open up an individual Roth account, because that grows, not only does the principal grow tax deferred, but so does your growth. So when you go to pull that out, it's already been taxed. You get all that money when you start pulling it out 100% tax free, because you've already paid tax on it. So if you could build, those two things and just try to take advantage of some of those tax advantages accounts and really kind of diversify. So, that's kind of, 5 or 6 steps, I would really suggest that they would start to take, to get them where they want to go, because they're in an interesting spot. But like I said, they're really not looking to retire. Like, right now, retirement age is 67 when you can start pulling Social Security. You can obviously start pulling Social Security at 62 if you want, but it's not full retirement age. So when you get to full retirement age, if you've already started pulling when you were 62, when you get to 67, full retirement age, that money's obviously going to be a little less. So, but they're not looking at an age, and it's very interesting with what they're doing. And like I said, it's more of a scale back type of thing of, what they can do, and that they figure they're going to continue to work. And that's where that kind of that gig economy or freelance work, comes in, because they can do that later in life, and they can continue to make that income. And it's not something that they're tied to a corporation where, you got to retire at a certain age or anything like that. They can continue to do those things, through life, and continue to have some income, when you consider their retirement age, but they don't officially retire. That's kind of what they're looking at. So it's very unique with what they're doing. And like I said, like we talked last time with Gen Z, of changing the landscape of investing with the wealth that they're going to be getting from baby boomers and things like that. You look at millennials now, and they could possibly change how people look at retirement going forward with what they're doing with investing early and looking at different, like private equities and different type of investing, and then not giving themselves a retirement date and trying to set themselves up financially to build their wealth to where they just scale back their work. You work part-time a couple of days a week and travel the other 3 or 4 or whatever they want to do. So it's kind of, it's kind of unique with what we've been talking about, with how these two generations can really change the landscape. One in investing with the Gen Z, and one really how you look at retirement with the millennials.
Yeah, we definitely have a really interesting future ahead.
Yeah, definitely.
Yeah, and thank you so much for explaining those potential action steps to be helpful for getting my generation ready. And yeah, like you said, starting late is better than not starting at all.
Yeah, and again, it doesn't have to be, there's things you can do out there. It doesn't have to be great amount, like I said, it doesn't have to be great amounts of money. It just, the important thing is starting and being consistent. If you put $50 a month away into some type of an investment and you do it consistently, that's a start. And obviously over time you can learn to grow that and build, because you want to try to build that compound interest. And
Yes.
if you have that opportunity you do work for a corporation and you get the benefit of putting into a 401k plan or something like that, you get that compounding interest along with that match. And that's the important thing. Just get started, get it compounding for you and get it working. And, as you get it later in life, you can obviously put more into it and things like that. And that's how it grows. But just getting started is important.
So true. Awesome. Thank you. And listeners, if you want even more information on different types of investing tips and insights, you can visit our financial intelligence resources on our website at www.wisdomchoice.net. We have an entire investing category, as well as some money calculators that could help you plan ahead for future life expenses. As well as you can sign up for our newsletter through our website, where we have a monthly market insight that can help you on the short term, knowing what's going on with the investing sphere. Then next time on in the Final Analysis Minisodes, we'll be jumping up to the next generation, Gen X, where we'll be talking about like the nitty gritty of retirement planning and investing for that kind of mid stage of life. All right. Thank you
Very
so
good.
much,
Yeah,
Joe. Can't wait.
you're welcome. Yeah, thank you so much. It's been great again.
Yeah. All right. And everyone, if you have any more specific topics or questions about our finance and investing 101 for generations, you can send us an email or give us a call at the office. Again, all of our information can be found at www.wisdomchoice.net. Thanks and bye.
Thank you.
Thanks for tuning in to the Final Analysis. We try to keep you informed. Be sure that you're on the email list and call us if you have any questions whatsoever. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professionals before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Wisdom Financial Management, LLC are not affiliated.